Home building permits in the Phoenix area are up big time, and that's in spite of persistently high interest rates. What does all this activity mean for home prices and the region's housing shortage? For that, we asked Catherine Rager. She's senior real estate reporter at the Arizona Republic and azcentral.com. Good to see you again.
It's always great to hang out with you and talk real estate.
Well, and that's what we're going to do, and we're going to talk about 57% up. What's going on here?
It's, well, one thing, and you mentioned interest rates. Home builders are able to do interest rate buy downs. Some sellers do, but I just saw on a couple home builder websites, like they're buying down to 4.6%.
Wow.
Compared to a 7 for a 30-year mortgage.
Can they afford to do that?
Yeah, they do. The way their financing is set up and the way they're going through with how they're doing it. And you know, it's only a 2-year usually thing and they're waiting for the rates, but it is helping spur housing, you know, and we have this really short supply of resales. So, but we're not nearly back to the records when you and I spoke during the boom.
And true. And 57% up through May as opposed to last year. Is that like boom time, or is that last year was so lousy?
Last year was pretty lousy when
Yes.
interest rates hit and they were figuring out the buy downs. But we also have this incredible demand and the housing shortage, which you mentioned. And the areas where we have TSMC, Amcor, Intel, those areas, new homes are going up. They need the new homes. So builders are having a hard time keeping up with demand.
So it does impact, the growing population has to be an impact, true?
Yes, absolutely. Absolutely, yes. And you know that we need the homes. We have people moving here. We have employees with jobs who can afford homes, and it's a lot tougher than it used to be.
Yeah, and you mentioned TSMC. Southwest Valley is tops, Northwest Valley is next. I mean, are these single-family homes? What kind of homes are being built?
Single-family homes, but also a lot of build-to-rent homes. Last year, the year before, we were #1 for build-to-rent homes, and we're still in like the top 3 or 4. And it started here, and those have really taken off. And people who rent, particularly if you come here for a job and you haven't lived here for a long time, like that, being able to live in a single-family home in a neighborhood, and they're really popular.
So build-to-rent homes aren't necessarily apartments and duplexes and these sorts of things.
No, they're standalone homes.
That's built to rent. That's a new. I've never heard that phrase.
And you wouldn't know. You go right past the neighborhoods. You wouldn't know. And you may have a big master plan community, and you have regular subdivision where the buyers, and then you have a build-to-rent subdivision right beside them, and the demand is there.
Okay, the demand is there. What about sales? What about pricing?
Pricing has been relatively flat, which is interesting because materials up, labor up, cost, but builders kind of went through this reworking after the pandemic when everything stopped, and then finding, workers, and our supply chains dried up. So they're coming back. But that's also, those things are still restricting a little bit the amount of homes they can build. So the demand is out there. And if you go to some of these new communities and you'll say, well, I do want to buy, and they're like, it'll take a while. We don't have any spec homes for you to move in. We're still getting through the process. So it's taking longer, and that pent-up demand is driving it. But catching up.
But pent-up demand, and you would think that would lift the prices. I mean, that's basic economic, but they're flat.
They're flat. Yes, I was very surprised when I saw that too. And and they're closer in price to resales than they were. The median resale is about $450.
Yeah.
And a new home about $475.
Yeah.
It used to be as much as like $100,000 spread.
So do you expect that to change, or do the analysts expect that to change?
Well, it's what people can afford. You're definitely building smaller homes on smaller lots, but that's a good, although some people don't want that, that's a good answer to affordability and our housing shortage, to get those homes. And then, there was talk that went through the legislature to try to make that easier to do and to get that zoning, but that gets the homes we need. And, we all don't need an acre lot,
Right.
Good if you want your acre lot and it works for you, but if you have a yard and you have your standalone home, it's 1,900 square feet instead of 2,700 square feet. Hey, that's bigger than an apartment.
No kidding. And you mentioned interest rates, and again, if you're a home builder right now and you are not buying down those rates, are you doing any business at all?
That's a good question. I think most are. The smaller privates, it might be tougher, and then also the luxury buyers that do those infill, that might be a little tougher, but the programs are out there and the financing, and a lot of these public builders have additional finance and are making it work. And I have talked to a lot of people who bought new homes just for that, even if they had to go farther out.
Interesting. You mentioned earlier this is far from the boom times that we used to talk about back in the yesteryear. How different?
Well, remember during the boom times, one year we had 55,000, I think, new homes go up, and that was a problem during the recession because a lot of them sat empty. But we're at half that, on pace. But a few years ago, we were at 18,000. So.
But is that not healthy? Because what we saw during the boom, that wasn't healthy, and when the recession hit, it hit here hard.
Yes, it did, and it was artificial demand. It was investors, speculators,
Yes.
not big investors, speculators who were buying 6 in a subdivision, and it wasn't coming out that they were doing that, and then they weren't putting any money down because we had the bad loans, which you and I talked about then,
Yes.
which just caused the crash and Wall Street and everything, and that we don't have those now.
I was going to ask before you go, because we're running out of time here, but speculation, we always talk about speculators. There's always an issue here and there. Where are they?
The speculators?
Yeah.
They can't go in with nothing down, and they don't have the money down. I mean, we still have investors, of course. We will always have investors
Right.
in Arizona and Metro Phoenix because of our growth. And we have those investors. Investors are buying, entire build to rent, the, communities and doing well with those. But it's just a completely different market, and it's much harder to get a mortgage. And so those are good things.
I was going to say, that sounds pretty healthy to me.
Yeah.
Catherine Rager, Arizona Republic, thanks for joining us.
Thank you, Ted.